Stocks slide across the world after US ups tariffs on imports from Canada, Mexico and China. In India, mid-caps feel the heat. Capital goods and utilities are the biggest drags.
The rupee falls to 87.23 against the US dollar, even as most Asian currencies fall between 0.5% to 1% in response to imminent tariff threats by President Donald Trump. Trade uncertainties trigger flight to safe havens in global markets, leading to a sharp surge in gold and the dollar index.
Market mavens Ridham Desai, Neelkant Mishra, S. Narain and Samir Arora welcome the budget and point to a strategic shift towards consumption as scope for government's capex spend slims. They see tax cut as a better way to distribute revenues versus wasteful expenditure.
Bajaj Auto and Hero MotoCorp see a decline in domestic sales in January, but strong growth in exports helped save the blushes. Premium bike makers Eicher Motors, however, revs up at home as well as overseas.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Hormaz Fatakia. The Nifty down about 200 points. The Sensex down about 550 points. But the Nifty Bank down by about 0.75% as well. One would call this a weak day for the bulls. But the good part is that we are saving on to levels at lower levels. And at the same time, we've seen some amount of recovery from the lows as well. We have a couple of pockets of the market which are trying to outperform today. Obviously, post-budget announcement, we've seen that shift to consumption. Urban consumption in particular is seeing some traction. And now, just as we speak, a couple of these IT names are also picking pace. So we have Infosys, which has moved to the higher point of today's trading range. Wipro as well, doing well. So we'll keep an eye out on, a bunch of stocks which are doing well. There is a broad swathe of red, but there are islands of green. So not all is bad, Hormaz.
Not all is bad. And considering the futures in the US, are we seeing the kind of sell-off that they are? We are being fairly resilient considering the drop that we have seen so far. And as you mentioned, there are islands of green, and most of these islands of green, as you mentioned, are these urban consumption names, be it the likes of Westlife Foodwork, Metro Brands, Voltas, Devyani International. All of these names are seeing a surge of anywhere between 5 to 7% in today's trading session, carrying on from where they left off on Saturday. As you can see there, Westlife Foodwork at the highest point of the day now, 8% higher for that stock. Metro Brands too, trading with gains of around 6.5%. Voltas is trading with gains of 6%. At one point, Blue Star on Saturday was up 13% after the budget announcement. So urban consumption, discretionary consumption, that is one theme that is seeing a big tick of green in today's session as well. But what is not doing very well though are the railway names and the PSUs. The railway names, the defense names, they continue to see a very, very sharp sell-off in today's trading session, be it the likes of RITES, which is down 8.5%, Jupiter Wagons is down 8.5%, Rail Vikas Nigam is down 8%, Bharat Dynamics is down 7%. So there is absolutely no let-off for these PSU names. They were down 7 to 8% on Saturday, and they are continuing that move in today's session as well, Mangalam.
Take that point completely. If you look at the BSE Cap Codes Index, it's down about 4.5% in today's trading session as well. So we have a bunch of stocks which were doing well over the last few trading years, so to say, are now coming under a bit of pressure. Maybe it is because of that sectoral shift that we're speaking about in terms of consumer too. But let's talk about Sun Pharma, the first management on the show. In their India business, they've seen outperformance versus other markets. India formulation sales actually grew by about nearly 14%. US formulation as well declined by about 0.7%. Our colleague Winnie caught up with CS Muralidharan, who's the group CFO, spoke about the results. The stock currently at the low point of trade, but here's what the management had to speak about the numbers.
So as we stated earlier, all our therapeutic segments are doing well as far as the Indian market is concerned. We have already shared that we would like to grow in line or above faster than the market. Along with the market performance, I would also like to share that approximately 50 to 55% of the growth is led by volumes and new products. And we are well positioned to grow in line or above the market going forward.
Okay. You've highlighted that all your therapies are doing well. I want to also understand, given that, recent deals that we have seen in from the company side focuses on a lot more new therapies as well. Maybe you could see derma, ophthalmology or oncology side, derma onco side. Could you explain us the strategy of the company going forward? Do you think these newer therapies is something that will see a better growth?
So our transactions, what we look at, as we said, is more towards oriented specialty, and at this point of time, not India focused.
Okay. Sir, I also want to understand in terms of US business, obviously that impact of Revlimid has started coming in, but I want to understand on the long-term basis now, what is the growth driver for the US market for the company? Where do you see the company's US business growing in the next couple of years?
See, all our products in the specialty portfolio perform well in the quarter. Overall, the outlook for specialty business remains very positive, and we expect our key specialty products to continue to grow in the coming quarters. As such, we do not give any specific guidance for any particular segment of business. However, it's pertinent to note that any specialty revenue growth is part of the overall revenue guidance for the group.
Okay, so actually I just want to understand, like you were mentioning also, specialty side of the business, US business has grown very well. So any specific focus in terms of drugs that could be leading the growth going forward? Do you think anything on that front? If you could give us any name or anything that you think will drive the growth there?
Our key products continue to do well. For example, in the current quarter, we saw good growth in Ilumya, Cequa, Winlevi, Odomzo, and it has been broad-based growth across our key specialty products.
Okay, broad-based growth plus with the key brands which you mentioned are also seeing good growth. So moving on, I want to understand in terms of R&D expenses. I believe in the con call you spoke about R&D expenses lowering the guidance to less than 7% for FY25 versus previously 7 to 8%. FY26 also, would this trend continue? Would R&D expense continue to be sub 7%? Or, this was just those one-off cases where we are seeing sub 7% and then move back to 7-8% what we have?
See, what we stated in the earnings call of 6 to 7% of sales for the current year FY25. As far as the R&D guidance for FY26, we will be giving the guidance later on along with the annual results.
Okay. And any update on Lexiliv? What is the current update in terms of litigation? Expected timeline of launch? Any clarity on that terms if you could get?
As far as Lexiliv is concerned, we have filed the appeal against the injunction. The oral hearings are expected to commence in the month of April, and we shall await for the outcome of the decision.
Okay, waiting for an outcome of decision somewhere around April. Okay, and so overall outlook for the emerging markets as well as the rest of the world managed to see growth this time. The formulation side, this good growth that we're seeing in both these market side, is that expected to continue?
See, emerging markets and the rest of the world, both markets are very key markets for us. And we continue to perform well in these markets, and we got a good pipeline in both the markets, and we expect to continue to do well in the respective key geographies where we participate in these markets.
All right, so that's the management of Sun Pharma. With that, we'll take a short break. On the other side, we have B. Vijay Kumar, who's the CMD at LG Balakrishnan and Brothers, joining in to discuss their third quarter numbers. A lot that the street is expecting from this company in the near future. We will get chatting with the management.
Back with us here on Halftime Report and continuing with corporate conversations. Then LG Balakrishnan reported a steady quarter. Revenue surged over 13%. The margins contracted marginally though. And we are being joined by B. Vijay Kumar, the Chairman and Managing Director at the company, who is joining us now to discuss the road ahead for the company. Mr. Vijay Kumar, good afternoon. Thank you so much for joining in. Now you look set to meet your revenue guidance for the year. What about margins though? You projected a 17% margin for FY25. For the first 9 months, you are at 16.5. You think you'd be able to meet that 17% target and even surpass it by the fourth quarter?
Yes, sir. We will surpass it. We will maintain 17%.
All right. And, a couple of things I wanted to know, because we understand why the margins were lower as well. Gross profit was at an all-time high, but EBITDA margins were lower on account of increase in headcount on account of the industrial chain facility. You had other expenses which were higher as well because of the trial runs of some of the new businesses. Let's talk about those businesses itself. The key triggers that the street believes for you would be the ramp up of LGB steels and the ramp up in industrial chains businesses. From levels at where they are right now, what is your target for both of these businesses for the next 12 to 18 months, sir?
We are looking at a total growth of 10%, all inclusive. And if you look at steel alone, we are looking at touching about 200 crores.
That is in FY26.
Yes, FY26.
And industrial chains business, how much will that be as a proportion of your sales? How will that grow?
Industrial chain, it's a little slow, but we will reach about 50 crores.
What about the new generation facility, Mr. Vijay Kumar? What was that contributing to your business in the third quarter? Because you're targeting revenue of around 100 to 125 crores in this fiscal by the from this new facility. Do you think you'll be able to achieve that? How much has it contributed already in the first 9 months?
This year we will have a contribution of about 30 crores. Next year we will have a contribution of 50 crores. That 125 is an objective, but we are a little slow reaching that.
How much is the utilization currently of that facility, sir?
About 10%.
All right. Do you think you are...
We are still in the process of training workmen, and so it's a little slow.
Right. Do you think you are under promising when it comes to growth for the next year? Because I'm looking at the last 7-8 quarters, you've outperformed the industry, the motorcycle industry, by at least 200 to 300 basis points on a regular basis. Next year, the street believes that the two-wheeler industry will grow in double digits, and you are expecting just 10% revenue growth. Do you think you can do about mid-teens with all the triggers that you have in place?
See, if the two-wheeler industry grows phenomenally, it's very good for us. We will also grow, but we are looking at being a very stable outlook. We are giving a 10% flat growth.
Okay.
We have a lot of divisions, metal forming, we have steel, we have by consolidating, we have also the US business. And you know that there is a lot of confusion with the international business, both in Europe as well as in the US. And
which is why I was getting to my next question, Mr. Vijay Kumar. What is the export picture looking like? You mentioned there is a lot of confusion with regards to business in the US and in Europe. Now with this latest tariff war concerns that have risen, would you want to increase your business more towards the domestic front, or what is the picture that you're witnessing on ground overseas right now when it comes to demand?
If you look at it on a blunt basis, any tariff from Mexico and on China is bound to help India. So if that happens, our export will improve, definitely. The export last year has been flat.
And
Yes.
how much is this part of your business, sir, the domestic to exports mix?
The export is about 13%.
Okay. On the key customers, one of the other expectations is that you are increasing your share of business with the key customers, and you are looking at higher share coming in from aftermarket as well. If you could give us a sense of, what your average revenue per key customer is, how are you looking to grow that? And in terms of aftermarket, what is your share at right now? What is your target?
The aftermarket would be about 32%.
And what is your target here, sir?
We'll maintain the 32%. No, the market, it's a mature market. It's not going to suddenly grow. It depends upon all the vehicles which have already been sold for the last 10, 15 years. So we will maintain what ratios are there. Competitors are also going to be very active.
All right. And what about the RSAL NCLT approval that has come by? I remember us having a conversation. You said that this new product line could actually add sales of almost 1,000 crores when you first spoke to us around this acquisition. Now the NCLT has, I suppose, approved it. When does that come onto your books, and by when do you reach the promised 1,000 crore?
The NCLT approval has been obtained. It's already there. We've changed the name of the company to LGB Steel. And we are already operating. We've done about 1,500 crores of domestic turnover. 1,500 tons of domestic consumption. We've also sold about 1,000 tons to the market. So beyond the capacity would be about 8,000 tons. But to reach that, we need a lot of capital addition, and the capital addition again takes time.
And at peak, what is the revenue that this can do?
We will currently, next year, we should do about 200 crores from this unit.
All right.
1,200 tons is possible, but over a period of 3-4 years, because getting the equipment and installing it is going to take me about 2-3 years.
All right, Mr. Vijay Kumar, thank you so much for spending time joining us today. Wish you good luck for the rest of the year as well. That's the management of LGB Balakrishnan, confident of meeting its margin guidance of 17% for FY25. Take a short break, more on the markets, and we focus on the F&O setup at midday on the other side. Stay tuned.
Welcome back. Even if you're looking at the indices right now, they're lower, but not much lower from what they were in the earlier part of the day itself. If anything, we've seen some bit of recovery from the lows itself. Good time to get you the update coming in from the F&O space in the market right now. Why is this important? Because even as the Nifty and the Nifty Bank are lower, the Midcap index is underperforming. They're holding on to crucial levels. The Nifty Bank is holding above that 49,000 mark. The Nifty itself is holding above that 23,270 mark. Why are they important? Because 49,000, closer to 49,000 is the 20-day moving average for the Nifty Bank, and closer to 23,270 is the 20-day moving average for the Nifty itself. So long as they hold about this, bulls would feel slightly better. All eyes will be on the Nifty Bank because the RBI policy outcome under the new governor is on Feb 7th itself. And amidst all of this, the urban consumption plays. Nestle, for instance, has 80% of its revenues coming in from urban India, holding on to the green. Voltas does about 5% in terms of gains today. Nykaa is doing a lot better. Jubilant Foodworks is doing well as well, and Bajaj Finance. If you're looking at buying urban consumer discretionary on finance, etc., the consumer loan growth for Bajaj Finance likely to be better as well. So those are a couple of factors that we'll keep an eye out on. The fact that the Nifty is holding on to important levels has had the put writers excited. So you have the 23,200 put, 23,300 put rather, fairly active for a premium of 100 rupees, telling you 23,200 would be an important support. We've also seen some writing at 23,250 put. Again, so between 23,178 to 23,200 is where the bulls see some support at the lower levels. But on the way up, there is some supply coming in, no two ways about that. We saw writing at the 23,500 call in the previous trading session as well, and that continues even now. So upwards of 23,550 is a level where, there could be some more supply, even if we do recover from current levels itself. A lot of long positions added again on urban discretionary names. We have United Breweries and Phoenix Mills, both of them in focus. Whereas the CapEx names, they are being beaten out of shape. So we have Torrent Power, Hoodco and NCC, all of them down anywhere between 6 to 9%, seeing a lot of short positions being added out there.
And you spoke of Hoodco is almost now halved from its peak, which was around 353. So the PSUs continue to sell off, and all of these names, be it Hoodco, Bharat Dynamics, the shipbuilding companies, all of them seeing significant pressure in today's session. What's also at the day's low, though, is Samvardhana Motherson. That too is trading 8.5% lower now amidst these Trump tariff concerns. We take a short break. On the other side, we connect with Saugata Gupta, who's the MD and CEO at Marico, to discuss the quarter gone by and the road ahead. Stay tuned. We'll be right back.
Welcome back. As we're seeing a bit of a sell-off in staples, just keep an eye out on Marico. The stock is at the low point of trade, but the company reported a third quarter which was better than its peers. Margins were under pressure on account of increase in key raw materials for the company. Let's connect with Saugata Gupta, who's the MD and CEO of the company, to get more sense on their third quarter performance, the outlook on that as well. Saugata, always a pleasure speaking with you. But before we speak about the performance, everyone's talking about this being a consumption-led budget itself, a consumption-focused budget. The cut in income tax expected to give a boost to urban consumption in particular. How do you see this as a move from the government, your comments, and how does this benefit a company like yours?
I think this will be a very big game changer because at the end of the day, I think if you look at the overall consumption situation, there was some stress in urban. It was a combination of inflation, the fact that real wages hadn't increased significantly, and also the fact that there hadn't been tax breaks in the last couple of years. So this will definitely spur consumption, and just not in FMCG, but if you look at it, could be QSR, apparel, some retail, two-wheelers, entry-level cars. So I think it's a overall good thing for the economy, and also I think it also improves sentiment. Sometimes sentiment also somewhere curtails consumption. So I believe this will be very good for the economy and a lot of sectors, and this will also drive therefore more demand, and leading to further investment if there is more demand and capacity creation.
Right. Saugata, with this boost in consumption that is expected, will you upsize your growth outlook as well going forward?
It will be, I would say there will be tailwinds to drive our aspirations. As you know that even in a difficult quarter, we delivered a 15% revenue growth, and in spite of significant input cost inflation, we delivered a decent bottom line growth. So what we have said in the outlook that we'll continue to deliver double-digit revenue growth, top quartile volume growth, and of course there would be some maybe transient profit in the couple of quarters, but that over the medium term will sort itself out. So I think this will just aid the consumption, and fortunately for us, if you look at our diversified portfolio, which is completely urban, Saffola is completely urban, so 70% of our portfolio is urban centric, so this will help.
All right, 70% of your portfolio urban-centric. This will be a tailwind in your double-digit revenue growth aspiration. But margins, that's been the pressure point, right? Let's talk about that. Oil prices, copra prices saw steep hike year on year. How low can your margins go from here on, and by when do you expect them to improve?
Look at copra cycles is usually a 18-month cycle, 15 to 18-month cycle. We are at the fag end of the cycle, so things will obviously sort itself out sometime towards the end of quarter one. And as we said that we will be able to deliver margins around 20. So maybe there would be some transient headwinds at the beginning of the year, but it will ease itself out and as we go through the year. I think our entire endeavor is to ensure that we continue to invest. We'll obviously have very, very institutionalized cost management programs that drives efficiency, but we're not going to, if you notice, we are one of the very few companies who have not cut A&P to manage margins, and therefore we'll continue to invest to grow. And I think the biggest tailwind for us is a combination of two factors: our diversification strategy, which is of foods, digital brands, and premium personal care, and our international business continues to do well. So it somewhere, gives some air cover.
And since you spoke of diversification, Saugata, if you take a look at your diversified portfolio, what is the difference in your overall portfolio margins compared to the combined margins of your diversified portfolio?
I think we have had significant improvement in margins, and we believe that, to give you an example, with scale, our oats portfolio is near about the company EBITDA. If you look at Beardo, we are already hitting a double-digit EBITDA. Plix is a brand which is expected again is in the positive territory. There is very little bleed in the two other digital brands. So the digital business is expected to hit 10% EBITDA in the next 3 years. Even we have if you look at our journey of margin expansion continues in the international business, especially in the Middle East and North Africa, where we are aggressively getting shares from competition. So there are enough levers to drive the margin. And I think the effort has been to that we have been extremely conscious of the fact that we will not drive disproportionate growth at the cost of margins in the digital business, and therefore having a lot of cash burn, which we have not been doing. We have been extremely prudent. We are happy with the 35%, 30% growth in the digital business, but doing it profitably.
Right, that's about the digital business. But let's talk about international business. You briefly mentioned into it. You were also looking to diversify away from Bangladesh. Where does that number stand at right now? And what's your target in terms of margin expansion or margin aspiration in the international business from here on?
We have been aggressively driving diversification on two fronts. One is that how do you have a business beyond Bangladesh? Bangladesh business now contributes to around only 40%. Some time ago, it was 50-55. Secondly, what we have been driving is reducing our dependence on coconut oil and some of the core brands. So there has been a huge journey in that diversification also. We are now present in categories like, if you look at shampoo in multiple countries, we are into body care, we are into multiple categories across some of the markets. I think 2 or 3 of the markets that are delivering significant growth one has been Middle East and North Africa, where we have been gaining, where we had a slightly under index presence, and the profit pool and the pool for top revenue was very high, and therefore we have been rapidly gaining market share as well as growth, and we are extremely confident of delivering 30% plus growth in that market. South Africa has played well. Our new country development has been also doing well. We have been extremely careful about expanding in Africa with less capital and less boots on the ground, because we believe that's a smarter way to expand. We are also doing we are also expanding into some of the other markets, including Southeast Asia. So I believe there is headroom for both top line growth and as the mix improves, the kind of an EBITDA improvement even in the international business. But I think having said all that, I think our Bangladesh business has been extremely resilient. We continue to grow double digits, and we are confident of growing double digits in that market.
And that's some optimism, Saugata. There is optimism all over your commentary in general as well. But aside of this optimism, is there any risk that you foresee?
Obviously, there could be black swan anywhere. I think that is something there. And obviously, we have to do a much better job on value-added hair oils. I think the others is about keeping the momentum and managing the medium-term, or rather the short-term margin pressures. But I think in India, one category we haven't done well is value-added hair oils. It has to get into positive. And I think international, we have to be careful about whether it's geopolitical or currency, those black swans, we need to be careful about. But I believe strongly that in today's world, there would be, volatility, there would be, black swans you have to embed into the business, and ability to anticipate a risk or anticipate an opportunity and being resilient is a critical, differentiator for organizations.
Fair point there. Candid of you to admit that, value-added hair oils is where you have to do a lot more work. We'll talk about that at another date. But is there any other category that you're eyeing in the diversification strategy, or anything that you're actively pursuing?
One of the things we want to look at is in foods. We already present very limited. We are prototyping on snacking and breakfast. I think beyond oats and masala oats, which is now critical mass, we need to create some big scale in 1 or 2 of the categories, and therefore we are just about wetting our feet on snacking and breakfast. We have launched muesli. So these are the 2 categories we intend to grow.
And any inorganic opportunities in the near future, or your plate is full?
Enough on our plate right now, but we keep on looking. That's something is a part of life.
All right, we take that point. Thank you so much for joining in. Double-digit revenue growth with margin pressure alleviating from the first quarter of FY26 with tailwinds coming in from the budget. Things look good for Marico, but the company should be walking the talk from here on as well, and that's what the street will eye as well. Take a short break, come back at you more on the markets and stock-specific action on the other side.
Welcome back. Still 210 points lower on the Nifty, but the broader markets too are in pain, particularly some of these capital goods stocks, and three names in particular that I would want to highlight: Thermax, Siemens, and of course some of the other capital goods stocks as well that are facing some pressure. And that is because Motilal Oswal believes that the industrial sector will face challenges in growing inflows at the pace at it did currently. And Vamakshi is here with more details on what Motilal Oswal said and the subsequent downgrades on the stock as well. Vamakshi.
Well, absolutely, Hormaz. All of these capital good names are under pressure today. When we look at the note from Motilal Oswal, they say that the capex growth is expected to be weak at 7.3% for FY25 based on the revised estimates, and 10% growth for FY26 as compared to 30% growth in capex that we had seen from FY21 to 24. They also add that private capex across base industries is yet to show signs of meaningful improvement, and they believe that the industrial sector is expected to face challenges in growing inflows at the same pace at which they had been growing in the past so far. When we look at the order inflows, they're expected to be lower over the next 1 to 2 years, and in fact higher impact is expected for companies with high exposure to railways, water, road construction, as well as private capex. But the companies which are more focused towards power, T&D, renewables, defense and high growth areas are expected to be better placed. Now what they say is that it is prudent to be selective now for the capital goods sector. They're baking in lower valuations, mainly on account of lower government capex and lower than expected private capex so far. So basis that, they've gone ahead and downgraded their rating on Hitachi Energy to sell as compared to neutral earlier. They've also cut the target price to 10,500 as compared to 13,300 earlier. Thermax, they've gone ahead and downgraded the stock to sell, cut the target price to 3,500, while for Siemens, they've downgraded their rating from buy to neutral. They've cut their target price down to 6,300 rupees per share. On the other hand, they are quite positive on L&T, ABB and Cummins in the large cap industrial space. For L&T, although they've maintained a buy rating, they've cut the target price to 4,100. For ABB too, they have a buy call but cut the target price down to 7,200. For Cummins, the buy call continues, target price cut down to 4,100. And in the defense space, they prefer Bharat Electronics. For the company, for the brokerage, the target price for BEL is at 360 rupees per share. They have a buy rating on this counter. So overall, it is mainly the lower expected order inflows that are expected to come through going forward, which is impacting the capital goods space as a whole.
Well, let me take that point. In fact, for the government, shift from infra to consumption was logical, but it isn't a complete shift away from infra. That's the word coming in from S. Narain, who is the Executive Director and Chief Investment Officer at ICICI Pru. And he says that this phase of investing in gold and silver as a standalone investment is also over. Let's listen in.
Clearly, it was a budget which was focused on consumption for the middle class, and they gave money to the middle class. Whether they'll choose to save it, repay loans or consume, this is the question for which we don't have the answer. But having said that, that is what the budget is about. This kind of shift was very logical on the part of the government, and so we don't complain. And I don't think it's a total shift away. It is just that you have to always, I think both the government and the regulators have to keep on doing things to help the areas which are not doing well, and actually to not give further support to the areas which are doing too well. Contra theme has been asset allocation because no one was willing to invest in it. Multi-asset is the only way in which we can think of gold now, because there's just too much of problems on the geopolitical side. Each country wants to levy duties on other countries. So at that point of time, some investment in gold is okay from an asset allocation standpoint. But would we like to recommend standalone investing in gold and silver at this point of time? I don't think so. I think that phase is over. That phase of being very positive on gold and silver standalone is over for us in our framework.
That's S. Narain there of ICICI Prudential on the investment strategies for gold and other precious metals as well. Take a short break. On the other side, Manisha Gupta joins in with Suankar Sen, who is the MD and CEO of Senco Gold and Diamonds. Stay tuned, we'll be right back.
Right now, as we speak, we've seen a bit of a deepening in the cuts that we've seen in the capex space itself. We have Siemens, which is now down 9%, and from the peak, we've seen a near, 26, 27-point correction on Siemens itself. Actually, 36% now as we speak. The 26, 27% was in the previous trading session, now down 10% for that stock. Hutco down 9%, NCC down 9%, Samvardhana Motherson down 8%. And the oil marketing companies as well. The belief is that, with no mention of under-recoveries being alleviated out there, they would be left to fend for themselves. So we have a near 7% cut that we're seeing on HPCL as well, and BPCL, IOC, all of them follow. On the other hand, we have SRF, which is doing well. So a couple of these chemical names purported to be beneficiaries of, the increased tariffs on China, and as a result of it, some shift coming into India itself, or maybe no crowding out of capacity from China as well, is doing well for them. And the rupee, which has now moved to another fresh low, upwards of 87.2, has some tailwinds for the IT space. So we have Wipro, which has moved to the high point of trade, Infosys, which has moved to the high point of trade as well. Alongside that, we have Manisha ma'am, who's joining in now. Manisha, there is the belief that, there was good announcements coming in from the gems and jewelry sector in the budget itself. No real changes out there.
Oh, well, absolutely. When you look at the markets there, and there's just so much confusion happening there. But what we understand from the industry, from various CEAs, analysts who've been looking at that report, is that this is just a different tariff line that is being created. Until now, you had gold coming in under just one HSN code. Now you have various ones there. So this is more to do with the structural change. This is more statistics than anything else. And this also would be done from 1st of May. So clearly no changes there. And the import duty on gold and silver just continues to be at 6%, as it has been the case. Is the reason we've seen all of that volatile move come into the market and then kind of stabilize there. But even more importantly, apart from budget, it is the tariffs that the markets are looking at right now. So you have the dollar index, which has run up so strongly, that has led to gold prices hit an all-time highs. But with that, now the belief is that you could be looking at lower, the interest rates not moving in like that, and that's led to some profit taking as well. So there's just so much to discuss about gold. Subankar Sen is MD and CEO Senco Gold, and he joins us to talk about all of that. Subankar, hi, the budget first, and do we understand it right that what we've seen in sense of budget is just a different tariff line being created, more HSN codes, and this is only being done for better statistical clarity, and nothing more?
Correct. So the good thing is that there has not been any kind of increase in terms of the duties. So we can already see that in the international markets, because of the uncertainties, the gold is moving upwards. So at least it's an effort from the government to not put unnecessary burden on the middle class and the consumers of India through an increase in duties. So that is one good thing. And yes, as you rightly pointed out, that there were certain confusions, the ores and the dorés and the alloys. So now it is much more rational, so that there is no duty lost by the government by any kind of confusion happening at the import level. So I think that's a very good step that the government has taken. And the best part is, which is needed not only for the jewelry sector but for the economy overall, is the focus on consumption. So whether the effort to reduce the income tax rates or the investment in the agricultural sector, because we all know that the economy will run if the agricultural sector does well and if the monsoons happen properly. So we could see that a lot of initiatives have been at least planned in that level. The skilling aspect of it, I'm sure the way we are also suffering and having young people who are employable, be it karigars or workers, I'm sure all sectors are going to have a similar challenge. So skilling, agriculture, in the long run, I think those are very good things that we will see good results in the coming months.
So you see that positive for the industry. But I just want to come back to this HSN code scenario one more time. So we do understand that it comes in effect from 1st of May 2025. Does it mean more paperwork for you then? I do understand that this is being done to clear data, better statistics in sense of government as well. And as you pointed out, that there is no revenue loss for the government. You know exactly what purity is coming in and in what category, in what sentiment then?
Yes. So paperwork, I don't think it is all about defining the particular product that you're importing. So, usually you have a 4-digit HSN code or a 6-digit or a 8-digit. So I think that it is just that now I think everyone is becoming much more aware of the variety of products that can be imported. So not everything can be put under one umbrella name or an umbrella code, but there are more specific codes for the specific type of product. So it's nothing more paperwork. It is being more clear in terms of defining what you're importing. So I think that's it. So not too much of paperwork.
All right. So, Ankar, now to the other thing, and as you pointed out, it's about the tariffs now. And we've seen dollar index gain. We've seen the gold prices hit an all-time high. And since then, we've seen a bit of a pullback as well as market continues to read into various scenarios here. I also do understand that for the Indian markets, we are trading into a discount of $30 to $35 an ounce right now. With these high volatile prices, discounts going in, markets still reading the budget and the tariffs, what really is the demand on ground?
So the demand on ground, if you really, analyze how the prices have moved up over the last 17 days, right, with the tariffs being announced by the U.S. president. So consumers are a little kind of cautious currently that, suddenly there has been such a huge jump in terms of the gold prices for those who can postpone their purchases. But at the same time, we shouldn't forget that this January, February, March, up to April, I think there are a lot of weddings that are still planned, and there are a lot of wedding dates, because after April and May, there is going to be a long gap of in terms of number of weddings, and again it will start happening in the post Diwali Dhanteras time. So those who have their weddings are having to buy, and many people are just waiting and watching. At the same time, from a other perspective, we have Valentine's Day coming up in the middle of February. So there the focus for the jewelry sector shifts from gold to diamonds. So we all are trying to promote diamonds as a category in terms of...
So, Ankar, we've seen that. But how has the month of January been until now? The month of January, did you see...
January has been... I think it's only in the end of January that we could see the prices jump. But if we look at the overall whole of January, January has been a good month for sales. Okay. Even December last week has been a holiday season. But from the first week of January, everything had picked up. And it's only in the end of January that prices kept shooting up, and people are postponing it. But January has been a good month. Yes.
Fair point. So, Ankar, as always, thank you so much for joining in and making sense of what came in during the budget, and of course the tariff impact as well. The Indian demand in the month of January towards the fag end clearly has been slightly on the weaker side, but as he said, this quarter overall is expected to be positive. But with that, that's all the time that we have on the show. Business Lunch takes all the action ahead.